Hi everyone and Happy New Year. Since my last video where I talked about the silver breakout, silver has gone up almost 50%. And now a lot of eyes are on silver as an investment, and I've seen so many opinions on social media on where it's going. So what is going to be happening in 2026 with silver, and what are some of the factors that are driving it? That's exactly what I want to go over in this video and continue to talk about the silver breakout that's happening in front of our eyes. In this video, I'm going to be talking about the following. Number one, the elements behind the silver squeeze. Number two, the direct pressures in the physical silver market. Number three, the Japan bond yields. Could it be a disaster? Number four, the Fed. They're under serious pressure and they're going to continue to print. And number five is the 2026 price predictions for silver. Before we start, let's talk about the actual numbers behind what's going on right now. Silver currently at $93 US. At time of recording, I believe when I last did, it was around just hitting 60s. So to go up to 93 in such a small period of time is absolutely unbelievable. And we're currently up close to 4% for the day right now. No, less. 3% for the day right now. And silver continues to rally in a really strong way, and the numbers continue to show very healthy signs. While the gold to silver ratio now stands at 50, in fact, it's almost about to head underneath 50 at 49. And now it's just hit that now for the first time in a very, very long period of time. So the question begins to be asked, is silver going to continue to go up? Is this sustainable, and what's going to happen? I really like this animation that was put together by the Smart Silver Stack, and that's what I'm basing my video around today. What are the driving forces behind the silver squeeze that's currently happening? I'm going to be talking about some of these points today, but to go over it quickly, we're seeing direct pressures on the physical market. I'm going to be going over that in more detail, but China has basically fused this whole event because they're running low on silver. We're seeing the US Mint struggling with silver eagle sales, and they're actually being forced to increase their premiums. We've seen the CME Group launch 100-ounce paper contracts, which I just see as a attempt to divert investment away from physical assets towards paper. We're seeing the macroeconomic storm in Japan, which I'm going to go over more, as well as a few other areas. Let's go over that now. The big news, which kind of fueled this whole thing, was what happened in China. So essentially, China's been forced into an export kind of ban. And essentially what's happened is China has limited their exporting of silver, and they've created a licensing system where only certain companies are allowed to export silver. So essentially what's causing these problems is the same thing I've been mentioning over and over again. We're seeing a deficit in the silver production. We're at a fifth year straight of deficit production, meaning there's less silver being produced than demanded. And it's having an effect now on countries such as China, India, and across the East and Russia. They're trying to gain as much silver as possible, and people are seeing a strategy in being able to gain silver as quickly as possible, as supply is very limited right now and countries are forced into moving. And China going straight to the source to actually go and get their metals. And they're actually not getting your fresh bullion silver, they're actually getting concentrate silver, which is where the silver hasn't been extracted properly. And they're paying spot price for this. So they're paying the extra amount to be able to get it, even if it's raw, and then using labor to be able to extract it. So they're paying serious money to be able to get silver into their hands immediately. And the situation is that currently things aren't looking great for them right now in terms of their silver supply, and they're moving fast. And as a result of this, Trump has been forced to respond, because the issue is America has been relying on imports from China for so long in terms of silver. I'll put up a chart now, but you can see the data behind it. The US does have a large reliance on China in terms of silver imports, and now they've got a massive problem. Their imports are no longer coming in critical minerals. Now, in this article, it hasn't directly stated silver, but due to the timing of it, of Jan 14th, 2026, I've made an assumption here that I believe that one of the critical minerals that are being mentioned is silver. I wanted to highlight this, that the president may also take other actions he deems necessary to adjust imports of PSMDPs. and eliminate the related threats to national security. Now, national security referring to silver as a source on a military level, I believe. Silver is used for a lot of key assets within military, including missiles, including tech, and it's very important to have that asset available. And the situation is that if the Americans also run out of that, they've got nothing fueling their military. President Trump recognized that PCMDPs, which are strategic minerals, are indispensable to almost every industry, including national defense programs and critical infrastructure, and recognizes the need to create diverse and more resilient supply chains to counterbalance the influence of non-market practices by foreign actors, meaning they're actually trying to find new ways of being able to get silver. They can't rely on a single source, such as China, who have imposed these export bans, and they need to change up their act and be able to get silver from multiple sources. I believe they'll be doing trades with Mexico in the near future. They're one of the major parties that produce silver, but things have to change quickly, and we're seeing basically a lot of countries being forced to act on what's happening right now. And because of all this, we've got a huge disconnect that's happening right now. So what we're seeing is that the COMEX price, and that's the price that we all know as the spot price for silver, is wrong compared to the Chinese price. And China considers silver to actually be $13 more on their market compared to COMEX. So now the question's being asked on the paper silver side if it's really legit. And these manipulated prices that I've been talking about for so long are now coming to light. And that's why it's critical to have some sort of physical form of silver. And that basically means that China's essentially paying above spot price and it's continuing to raise prices. Now, COMEX is being forced to catch up, and that's why the silver spot price is being forced to follow this. They don't have a choice right now. And it's a sign that COMEX has really lost their power. They can't manipulate it as much anymore because reality is hit. Supply and demand is the only thing that really determines price. And you can manipulate for a certain period of time, but eventually things break down. That's what's happening right now in silver, and that's one of the big reasons why we're seeing such a big push. I'll also pull up another chart for you guys. So the silver stockpiles in China slump after record exports, and I think this may have had to do with them trying to save COMEX. So I'll put another article out, but essentially not COMEX, but the London bullion market really needed silver as there was a huge demand on their side, and they leased a bunch out from China. And all this exporting that China's done has really cost them now. And we're seeing these stockpiles decrease at a massive level, and that's fueling this whole event. So these are all numbers to be aware of, and this is the number one thing that's fueling this whole thing, this huge physical shortage in silver that's pushing everything so high upwards and so quickly. And I think it's going to continue to squeeze for the future. The second thing that's happening right now is the Japanese bond yields are going up. Now, this sounds pretty technical, and it's more on a macroeconomic level, meaning just on a holistic level with the economy. So Japan bond yields have always been kind of low. And if I look at it on a very long term, like this chart here, they've always been in very low values. However, we're starting to begin to see a rise. So if I go all, for a long period of time, the Japanese bond yield was low, meaning essentially interest rates in Japan were at zero. And there was a lot of borrowing that happened by the government of Japan, and as well as investors were getting money from Japan at these 0% rates and using it to invest and arbitrage in the US stock markets. Now the party is starting to come to a halt. We're seeing that this debt that Japan's accrued and that investors have accrued are now going to have a cost. 2% is their Japanese bond yield. It means suddenly they're going to have to pay this back, and with an interest. And it asks the question of how the heck are they going to pay it back? The fear in the market is that are they going to be forced into selling their assets and selling their stocks? If that happens, that could cause a huge market downturn, and that's caused a push towards safe haven assets such as gold and silver. To make this even more frightening, Japan's debt to GDP ratio is currently sitting at an astronomical 232.35%, meaning their debt that they're holding is worth double the amount of what they produce per year. Basically, meaning their debt is now impossible to get under control. Now, the reason why it's been hiking up so much was if you look at this compared to the previous graph, when the opportunity was there to borrow at 0% interest rates, they took it. And you can see the moment it went up. And now they're going to be paying the price for it now. This is a very high number and it's very hard to get this down. So we're seeing Japan's currently in a very dangerous situation. And I believe with a downturn in Japan happening, it could lead to a chain effect where the whole economy could be forced into an economic downturn. And it's just made people a lot more nervous, and it's something we need to keep an eye on. The next thing is what's been happening now in the US. We know that Jerome Powell is under pressure right now. We know that Donald Trump has been calling for these interest rate drops, and now he's actually been subpoenaed. So he's been called to the stand for not dropping rates and now being asked to come forward for criminal charges. And I did some research. I was wondering why there was such a hard attack on him. And it became very easy to see why this situation is happening where Jerome Powell is under pressure. The situation is simple. The percentage of US federal debt maturing in 1 year is going to go up dramatically heading into this year. I'm going to pull it up now. But a reminder that 1/4 of US debt matures in the next 12 months, meaning that they've got a lot of debt to pay off. And they need to keep rates down or else they cannot finance this debt any longer. They need to get cuts urgently or else they're not going to be able to fund this anymore. We can see times where the maturing rate has gone up in 1 year and where the rates were during that period of time. So this is a very, very dangerous period right now. And right now, they've spiked again heading into this year, and we've got a rate of 3.75%, which is high compared to the 0% we've had in the past. And Trump has essentially got it desperate and needs this to change. Now, I've got some numbers here I'm going to be reading out, but the US debt maturity refers to when Treasury and securities must be repaid. And the issue is there's $9 trillion maturing in 2026. Now, that number is so astronomical that it's critical that they need to get this rate down or else they're not going to be able to pay it back. They're not going to be able to get a refinance, and we don't know what's going to happen going forward. Now, this has made things very nervy, but what it does guarantee is this. There might be more printing that's going to happen. These rates are going to come down, and they're going to come down aggressively as they try to get this refinancing sorted of the maturing debt. So I'm expecting more QE to happen, and I'm expecting more printing to come ahead. And this is only going to fuel the silver and gold prices even more. So the reality is that this is going to keep putting more pressure on the prices of silver and gold and force it upwards. So it's something that I'm keeping an eye on as well. And I think the US is in a very, very fragile state right now. I'm expecting multiple rate cuts within the start of this year as things change and Jerome Powell's been now put under pressure. I expect a Fed chair change as well, and I expect Jerome Powell to be replaced altogether and put in by someone new. Whether you agree with it or not, I'm unsure, but I'm just stating the facts right now. Looking at all the data, this is what I think is going to happen, and this is not financial advice, but from what I can see right now, I expect much the same for silver, and I expect an aggressive increase this year of 100% plus, easy 120 or 130%. So we'd well and truly get into the 100s in silver US. I could easily see 150 to 200 being a target for silver. And the factors that I've mentioned are the reason why. Supply in silver isn't something that's easy to get. You can't fix it instantly because it takes time to open silver mines and be able to get these numbers back to normal. So we're seeing that there's a huge supply squeeze that's happening in silver, and this has been happening due to the mass amount of manipulation in the silver prices. On top of that, we can see on a macroeconomic level, things are getting tough right now. Both the Japanese bond yields, which are causing a lot of nervousness in the markets, and the US being forced into potentially more printing as their debt matures. Take what you will from this. This is not financial advice, this is my opinion. But the numbers continue to look bullish in silver, and today it looks like it's reacted pretty strongly. I hope you enjoyed this video. I hope you've had a good, happy new year. And I can't wait to see you in future videos. I'm going to continue posting regularly in silver as it's an asset I've got my eyes on a lot. And if you want to learn more, if you have any questions, feel free to ask it in the comments below and I'll answer it as best as I can. I'll try and help you with your investing, not financial advice, but it's just my opinion. Thank you, and I hope you enjoyed this video.